Hey everyone, welcome back to Corporate Decoder, the place where we find out if companies are really building castles or just selling sand in a bottle. Today we're diving into Rexford Industrial Realty's latest filing a report that's all about making it rain, or at least trying to sell more shares to make it rain. So what's the big news? Rexford Industrial Realty, a company that invests in industrial properties, is making some big moves to raise more cash. They've entered into new agreements to sell up to a whopping $1.25 billion worth of their common stock. Think of it like them saying, okay, we've got our business running smoothly now, let's get some extra fuel for the rocket ship. This is a pretty standard move for a company like Rexford. They're essentially setting up the framework to sell their stock directly to investors in the open market over time. It's like opening up several new channels to get their product out there. Now, let's talk about what they're selling. It's their common stock. This is the basic ownership stake in the company. When you buy a share of common stock, you own a tiny piece of Rexford Industrial Realty. They also have preferred stock, which is a bit like common stock, but with some special features, usually a fixed dividend. They're mentioning their Series B and Series C preferred stock here. Think of it as different flavors of ownership they can offer. All this action officially kicked off on July 22, 2025. That's the date when these new stock selling plans were put into place. So who are they working with to sell all this stock? They've partnered up with some big names in finance. You've got agreements with BMO Capital Markets and BNP Paribas Securities. These are essentially the brokers or investment banks that will help them find buyers for their shares. It's like hiring a real estate agency to sell your properties, but instead of properties, they're selling pieces of the company itself. And the really interesting part is that they're not just signing up new partners, they're also updating their existing agreements. This means they've made changes to contracts they already had in place with other financial institutions like Bofa Securities, Goldman Sachs, and JP Morgan Chase. Why? To include these new stock selling plans and bring in the new partners, it's like telling your old team members, hey, we're expanding the sales force now, and adding these new talented folks to help us sell even more. Now, here's where the numbers get really juicy. They've already sold quite a bit through their previous agreements. As of July 2025, they had already sold shares worth about 325. They had already sold shares worth about 325. They had already sold, have a massive amount left to sell under these new and updated agreements up to 9027 fort of money they can access to grow their business. So what does all this mean for Rexford Industrial Realty? Raising this much capital usually signals a company's intent to expand aggressively. They might be looking to buy more industrial properties, which are in high demand, especially with the growth of e-commerce. They could also be refinancing debt or investing in technology to manage their growing portfolio. It's a strong signal that they see significant opportunities ahead and are preparing to seize them. Now Rexford operates in the industrial real estate sector, which has been a bright spot for many investors. Think warehouses, logistics centres and distribution facilities. The pandemic really highlighted how crucial these properties are for supply chains. So companies like Rexford that own these assets are often in a good position. However, real estate is cyclical and sensitive to interest rates. If interest rates go and sensitive to interest rates, if interest rates go up, it becomes more expensive for companies to borrow money to buy properties, and it can also make their existing debt harder to manage. Considering these new stock sales, it's important for investors to understand that selling more stock dilutes the ownership of existing shareholders. That means if you own shares now, when they sell more shares, your percentage of ownership in the company goes down. However, this is often an unnecessary trade-off for growth. The company is betting that the new capital raised will generate returns that far outweigh the dilution. From a Warren Buffett perspective, we'd want to see how wisely they deploy this capital. Are they buying good properties at good prices? Are their new investments likely to generate strong cash flow? The ability to raise over $1 billion shows financial strength and market confidence, but the real test is how they use it. In conclusion, Rexford Industrial Realty is making a significant strategic move to fuel its growth. They're leveraging their access to capital markets to potentially acquire more assets and solidify their position in the industrial real estate sector. The sheer amount of money they can raise is impressive and points to a confident outlook for the company's future. As always, though, it's crucial for investors to keep an eye on how this capital is used and whether it translates into sustainable value creation. What are your thoughts on Rexford's big fundraising plans? Do you think this is a smart move for the company's future? Let me know in the comments below. If you found this breakdown helpful, please give this video a thumbs up, and most importantly, subscribe to Corporate Decoder for more in-depth looks into company filings. And don't forget to join our Discord community for more discussions and insights linked in the description. Thanks for watching. See you next time.